Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1448 and today's date is December 14th, 2017, and the title of the episode is The Move from the West to the East is Almost Complete. Be prepared for the next phase. Now, before I get started, I just want to make an announcement. I uploaded an interview with Frank Holmes. It's on the X22 Report Spotlight YouTube channel. So all you need to do is go over to YouTube, type in X22 Report Spotlight. It will bring you right to the interview, or you can come over to X22Report.com or NewSentinel.com. Scroll down a little bit, look over to your right-hand side. You'll see the interview right there. Or go to Steemit. That is steemit.com/@X22Report. And you can play the interview right on Steemit. Let's get into the economic collapse financial news. Now, we are starting to see cracks all over the economy, and of course what they're trying to do is they're trying to make it seem like everything is still fine in the economy, and we're starting to see this in Canada, the United States, throughout Europe, and they're going to keep this continually ongoing until a certain point where all of a sudden they start saying, well, because of what Trump is doing or because of this or that, this is why the economy is failing, and then eventually they'll have an event to really bring it home. But what we're seeing is that most of what they've been telling us, I'd say 99.999%, has been a complete and utter lie, where they've tricked us into thinking that the economy is doing well. And they continually do this. They continually lie to the people to convince us that things are fine. Now, out in Canada, we're starting to see that home values, well, they're starting to decline. And this is the first time since the first quarter of 2009. Now, remember, all of this was pumped up to make us believe that everything is fantastic. And all I did was create incredible, gigantic bubbles. And every time they do this, they pop. We see household debt in Canada rose to a new record of about $2.11 trillion in the third quarter of 2017. This is up by 5.2% from a year ago and up 10.7% from 2 years ago. This is coming from Statistics Canada, and most of the debt is coming from mortgages, which is about 65.6% of the total debt right now, and the rest is coming from credit cards, auto loans, and things like that. And we can see right now that Canada's infamous household debt to disposable income ratio, one of the highest in the world, rose to a breathtaking record of 173.3%. Now, the ratio means that households, on average, owe $173 for every dollar after tax income earned. And we can see right now, this is not just happening in Canada, it's happening in the United States, it's happening out in Australia, in Europe, and it's varying from country to country. Here in the United States, we see initial jobless claims. They are back to 44-year lows, and every time we've seen this, and this is the lowest it's ever been, we enter a recession, a depression. And if we look back, going back to 1970s, because that's the level we're at, we were in a huge recession at that time. When we go back to the 80s, when we go back to the 90s, when we go back to 2000, 2001, go back to 2008, it has always been the same exact pattern. And as we move forward, it's not going to get any better. What this is telling us is that they've been manipulating these numbers, bringing this down, trying to convince us that no one is, applying for initial jobless claims. There's nothing wrong with the economy. The unemployment is at the lowest point ever. And if this is true, we would see retail sales booming like we've never seen before. And it just so happens out of the corporate media, and we see it all over Bloomberg, we see it all over the corporate media. You see articles everywhere saying that U.S. retail sales surge at the fastest pace since 2012. And online sales, they are soaring. Now remember, these are government numbers. Remember, these are estimates. Remember how they figure this out. They take what they have, and if they don't like what they have, they change it. They don't count the stores that are closing. They don't count any of that. They take it and they factor it out over the year to make it look really good. And we need to remember something very important about this, is that a third of the sales are coming from gasoline sales because they increased in price. That's where they're getting these numbers from. That's not all. I mean, we have manipulating numbers. Now, people are going to say, well, just a minute. we can see that sales are doing a lot better in retail. Really? Well, let's go back to 2016 and let's look at some of the headlines that they were reporting at the same time. And let me know if it sounds really familiar. Holiday retail sales increased 4% in 2016. That's coming from the National Retail Federation. Things look incredible for retail. Record-setting holiday for retail. Online sales surged to $91.7 billion. That's from Fortune. Target shattered a shopping record on Thanksgiving. And it's doing incredible. Retailers are saying the traffic coming in is absolutely fantastic. That one was from Business Insider. So, wait a minute. They had these headlines telling us how great retail sales were back in 2016 going into 2017. And we reported back then that this was a lie. These aren't even the real retail numbers. They haven't even come out yet. So think about this for a second. When we entered January, and actually during the holiday season, we talked about the stores that were closing down who declared bankruptcy during the holiday season while these headlines were coming out. And then right after the holiday season, Macy's said they had to close some stores. Then all of a sudden, the retail apocalypse started to pick up. All of a sudden, we heard a lot more stores going bankrupt. Remember, their debt comes due next year. Do you really think what the corporate media is putting out there right now is the truth? Do you really think retail sales are the best they've ever seen? I mean, think about what is happening here. First of all, these are government numbers. We know they're completely manipulated. These aren't the real numbers from the retails. And remember, when the government receives the real numbers from the retails, if they don't like what they're seeing, they change them. We've seen the same exact headlines. There's no difference between this year and... Wait, there is a difference. This year it's a lot worse. We've already had all these stores closed. We've had a lot of people laid off. Debt has risen to astronomical levels. People can't go out and spend. Why? Think about it. Wages are declining. So wages are declining, but people are spending more money. Wait a minute. The debt level for consumers has reached a point where we've never seen this before. Well, yes, the Great Recession. So people have brought their credit cards up to the max, but people are still spending. Wait, savings have been coming down, so where are they getting all this money to spend? Think about this for a second. Common sense tells you they're lying. And we've proved this time and time again each and every year. Because after the holiday season, guess what happens? Stores close. They tell you how bad it is. They show all the different bankruptcies. And all of a sudden, and if you go back in time, you can check the Wayback Machine, the corporate media starts changing their headlines. They do this quite often, where they tell you the holiday season's great, and then after the holiday season, they go back and they change the headline to fit a completely different narrative of the story. And we're going to see this once again. The whole thing is a lie. We see that the service industry has slumped, and it's declining. It's at 15-month lows. Janet Yellen was asked a question by Steve Leisman, and the question was, every day, and he's from CNBC, every day it seems the stock market goes up triple digits on the Dow Jones. Is it now, or will it soon become a worry for the central bank that valuations are this high? Now, this answer that Janet Yellen gave was incredible. I think when we look at other indicators of financial stability risks, there's nothing flashing red there, or possibly even orange. We have a much more resilient, stronger banking system than ever before. Well, actually, Janet Yellen, we don't. Because just 1 week ago, in the annual report from the Office of Financial Stability, issued a very clear and very explicit warning about the vulnerabilities in a financial system, in which they warned that the increase in already elevated asset prices and the decrease in risk premiums may leave some markets vulnerable to a large correction, a polite government term saying crash. Now, such corrections can trigger financial instability, when important holders of intermediaries of the assets employ high degrees of leverage or rely on short-term loans to finance long-term assets. Furthermore, the OFR did its best to paraphrase stability is destabilizing by noting that historically low volatility levels reflect calm markets, but could also suggest the financial system is more fragile and prone to crisis. So the watchdog group is countering what the Fed is saying. Now remember, the Fed is not out there to do everything in their best interest for the people of the country or the world. They're out there to do the best interest for themselves, for those people who are on the board, those people who are making a lot of money off of this system. And if we go back in time and we listen to Ben Bernanke, it sounds like we're hearing the same exact things once again. And we're hearing them, guess what, right before the whole system is going to come down. And of course, what they're going to do is they're going to blame it on someone else or another group or an event. However they do this, it will never come back to them. They will not allow this. At least this is what they're going to try to do. Doesn't mean that this time that people might say, hey, you know something? You're really the cause of this. Now we're starting to see that we're in the next phase of everything moving from the west to east. We talked about how the BRICS is setting up a gold trading system. We understand the payment system, the trading systems have been duplicated out in the east. We know that China has created the petro yuan. And what we're seeing right now is that China has successfully completed its fifth dry run in yuan-backed oil futures contract trading. The step has already called Beijing's challenge to the US dollar. And it looks like the move is almost complete because all the testing and everything that they've done is almost there. All they need to do is most likely set up the BRICS gold trading system, and they're ready to go. Now, this contract has the potential to greatly help China's push for yuan internationalization. Now, a former China division chief at the IMF, and remember, I'm not saying this is not part of the central banking system. This is exactly what the central banking system is doing. They're moving everything because they realize the old system is dying. They want to restart a new system. Someplace where there's manufacturing, someplace where there's gold, so the world thinks the system is stable, someplace where they have everything duplicated. Oh, that has to be China. And they're saying, and this former China division chief at the IMF is saying it is not unreasonable to envision a world in which the overwhelming share of commodity contracts, especially for oil, are no longer denominated just in dollars. The Chinese government announced plans to start a crude oil futures contract priced in yuan and convertible into gold earlier this year. And we can see right now that they're in the final phase. The next phase most likely is the BRICS gold trading system, which they want up and running in 2018. So what do we see happening here? The Fed, the cabal, those interested in keeping this system alive here in the United States because they make a lot of money off of it, they're putting the idea, the illusionary idea out there that the economy is doing well. They've done this many times before because, again, they don't want this to be blamed on them. They want it to be blamed on someone else, on an event, or anything else. So they're going to do this until the very, very end. They might trickle in some of the things that say, ooh, if Trump does this, this is going to hurt the economy, just to make it look really, really good that Trump is going to be responsible, or, you know, this is why this is happening because of this event or whatever they're going to dream up, because you know they're going to dream up something. And at this point right now, this is what we've been looking at all along. It's almost like going back to 2008, looking at the subprime securities, where they told us it was all AAA, retail was doing great, the stock market can never go down, housing can never go down, everything is contained, and everything just completely fell apart. Here we are looking through the propaganda and looking at the nuts and bolts of the economy, just like those individuals that looked at the subprime securities and said, well, I don't really believe what the corporate media is saying. I don't believe what Goldman Sachs is saying. I want to see what's inside these subprime securities. And wait a minute, there are loans in there, and most of them are defaulting, and most of them are bad loans. These aren't rated AAA. There's something wrong here. This is what we're doing. We're looking through all this propaganda junk to see what's really going on and saying, you know something, this doesn't hold water, what they're saying here. And we've been doing this for quite a while, and we can see from what has been happening here, it has been a slow deterioration of the economy, because when we use common sense and we say, well, unemployment's at 4.1%, we should see retail booming. And we made the connection, we connected the dots and said, well, if this is going to happen, then retail is going to decline. And of course, it declined. Now, people have said, well, that's because it's going online. And then we proved that online sales is only 10% of retail market. Actually, Amazon is only 3%. So what we're seeing here is that everything that we've been looking at and connecting these dots and looking at all the indicators is showing us that what they are feeding us is completely fake, phony, and false. And what is happening is they're keeping us in this illusionary world, while in the background, they're moving everything from the west to the east. They're distracting everyone so you don't see what's really happening. But we do. We know. This is why we're getting prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.